Welcome to the Trading Underground Show, episode 1 of the A to Z of trading terms. In this episode we will look at trading instruments. There are 3 common types of instruments for the standard investor, plain simple instruments. Now the first are deeds and certificates, which usually gives you outright ownership of an asset. For stocks and shares, we have certificates of ownership. They usually come in the form of a paper form or an electronic form. We have property and land, where deeds show you are the outright owner, and so on and so on. Then we have futures. Plain futures are offered by many brokers. We have 2 main types of futures for the average Joe investor, and these are CFDs and DFBs. CFDs, you own the underlying asset, whether it's a stock or another asset, but are subject to taxes. DFBs, you do not own the underlying asset but have many tax advantages. DFBs are customised instruments to help retail traders not to be subject to taxes, which is a very good thing for first time traders or small retail traders. Then we have options. Vanilla options, these are called, which are puts and calls. A put option gives you the right to buy an asset at a certain price. So if you buy a put option for Barclays, then it gives you the right to buy Barclays shares at a price which you can usually dictate, which is called the strike price. And that's the opposite for a call option, which gives you the right to sell an asset at a certain price. I will focus on options in more detail in another show because they are very good instruments to trade with. Not only for traders and investors, but also for small and medium businesses and homeowners. They are very good instruments for these type of entities. Then we have other exotic instruments like swaps, OTC derivatives and exotic options. But they are for the major large banks, large funds and brokers, so there's no need to worry about them, especially if you're a first time trader starting out. Do not touch binary options. At all costs, do not use them. Now, some of you may have heard of derivatives. A derivative is just a contract where the price is affected by the underlying security or asset. A futures, as we mentioned, that's a derivative. An option, as we mentioned, that's a derivative. Now, thank you for listening to this episode, and feel free to check out our website. And remember, builders build, lovers love, and us traders, we trade. Until our next show, peace.